So welcome back. We are privileged to have Shri Amit Sinha, General Manager, Sustainable Finance Group at the Department of Regulation, Reserve Bank of India, who will be giving a talk on the regulatory perspectives of the RBI on sustainable finance and related topics. Shri Amit Sinha is a General Manager attached to the Sustainable Finance Group. He has a wide experience of working in different verticals of the RBI. In various capacities and regulations and operations in a 19-year career in central banking. So he has had the opportunity to work in reserve management, foreign exchange management, currency management, consumer education and protection, financial inclusion, banking, premises, and other topics. He was closely involved in some innovative activities in RBI like Regulation Review Authority, climate stress testing, and others. Shri Sinha is tasked with handling climate finance and related matters in various forums, and his current assignment includes working as RBI-nominated member in various working groups and streams of the BIS, FSB, and NGFS. Shri Sinha has a bachelor's degree in science from the University of Delhi and also holds a CAIIB degree and a certificate in treasury and risk management, beside diploma in banking from ICFA University. He has also completed a course on macroeconomics of climate change conducted by the International Monetary Fund. So with this brief introduction, I would like to invite Shri Sinha to give a special address to this audience. Thank you.
Good morning. And first, let me congratulate the Indian Institute of Management for conducting this conference, which is very relevant and very timely. And personally, I would like to thank the Institute and the Arun Duggal Center and the Mishra Center for giving me an opportunity to speak. While today I'll be covering on the aspects of like regulatory issues or the regulatory perspective on how to address climate-related financial risks and to promote green financing. But let me again take the cue from where Professor Anish had said, can biologists fix the radio? I don't have an answer. Maybe you can have. So the question is, in my maybe another 25-30 minutes of the speech, I'll be covering on the regulatory perspective broadly 3 aspects. Why should Reserve Bank be concerned? Reserve Bank is the central bank. Why should RBI be concerned about the climate risk or the climate-related financial risks? The second, whether RBI has done something or not. If yes, what exactly? And what is the expectation from the banks, from the NBFCs, and other regulated entities of RBI? Broadly, if you have any question, you can stop me, you can ask, or maybe we can take the questions in the end. Now, the question is, why should RBI be concerned? I'm not entering into an area whether climate change is a threat or not. Professor Caroline has already dealt with that. And thanks to you, you have set the tone and you have made my life easy and difficult both. You have made my life easy by setting the tone, introducing the topic. You have made my life tough. I don't know what to say next. Anyway, I'll be covering the regulatory aspects. Maybe that I can do just some justice. The question is, why should RBI be concerned? Any thoughts on that? Now, Reserve Bank is the central bank. I hope there is no doubt. Every country has a central bank. India's central bank is Reserve Bank. Interestingly, the central bank in India, which is Reserve Bank, is a full service central bank. Now, what do I mean by a full service central bank? In many countries, the functions are done by different entities. Like in UK, we have Bank of England and the PRA. In France, BDF, ACPR. In Australia, Reserve Bank of Australia and APRA. There are many likewise. In India, Reserve Bank is doing all the functions. It is the regulator and supervisor of the regulated entities of the financial system, currency management, foreign exchange management, monetary policy, and some more, including research and all. That's why we call it as a full service central bank. Now, so when there is a climate change, when there is a threat of climate change, what happens? Again, let me go back to the preamble of the RBI Act. We have a lawyer in between, I think he has just left. Okay. There. The preamble of the RBI Act. Operating the currency and credit system of the country to its advantage. That's one part. I'm just taking the cues of few of that. Maintaining price stability by keeping in mind the objectives of growth. Now, there, let me take the cue. If due to climate change, I'm not entering into an area of climate science. Due to climate change, there could be a change in the precipitation patterns, the temperature patterns. That is going to have a macroeconomic impact. There can be implications on the inflation, on the growth. So that is one reason why Reserve Bank is concerned, or why a policy maker should be concerned. Not only Reserve Bank, other financial regulators or government are also concerned. Operating the currency and credit system of the country to its advantage. I said Reserve Bank is the regulator and supervisor of the financial system. So that means making the rules, enforcing those rules, right? So when a bank is a trust institution, mind it. When a bank, we all go to a bank, we have a banker here, we all go to a bank, keep our money there in trust. Do we ask the bank, okay, I am telling you, you have to invest there? We never do. It's a trust institution. As long as that trust is there, the bank is surviving. As long as the trust is lost, anything can happen. Correct? So it's a trust institution. Now, banks are into the business of accepting deposits, lending, investment, right? So when the bank lends, it is basically doing a maturity transformation. What if the counterparty or the borrower does not repay to me or does not repay as per the timelines prescribed? It is a risk. And that's a very simply said, it's a great deal of risk. The entire banking system is basically built on the premise of risk management. So if because of this risk, the counterparty to which I have given the loan is not in a position to repay it to me, how would I repay it to the depositors who have given the money to me in trust? Correct? If I invest, so that's the credit risk. If I invest into a, let's say, a bond or a security, we have seen in some countries, yields are rising, correct? Because the interest rates are rising. Rising yields impact the balance sheet. The investors, basically, let's say I'm the bank, I have invested, not only do I extend loans, I invest also. I have invested into some corporates, the yields are rising. I will have the mark-to-market losses. As long as, so that's a market risk. As long as the MTM losses are in the books, still okay. What if you and I go to the bank, I don't trust you anymore. Please repay it to me now. How do I liquidate? If I liquidate, that's the loss booking into my balance sheet. That's what happened. I hope you have followed the media reportings. That's what happened in the simplest of the form, correct? So that is why, as a regulator, Reserve Bank is concerned, there is a great deal of risk. The risk, the climate risk, let me slightly segregate. The climate risk is basically driving into the financial risks, the credit risk, the market risk, the liquidity risk. There can be operational risks as well. Operational in a simplest form, like if there is a physical event, my business operations may get impacted. I may be sued. It is actually happening. Professor Caroline gave some examples, right? That's the risk. Now, if the banks are not in a position to address that risk, that is going to have the financial stability concerns. And when there is a financial stability implication, and mind it, at the same time, the economy needs the support of the banks who are on life support now. This is the feedback loop or the amplification channels, not only banks, even the insurance companies. There can be insurance protection gaps or the insurance premium going rapidly. I'm not sure if you have followed what happened as a fallout of COVID. There were many institutions where group like term life insurance was there. Let's say the annual premium, insurance premium was for a policy of say INR 1 crores, was say for a age 20,000. After COVID, a lot of claims happened. And then it was next year, it was 1.5 lakhs. This has actually happened. So the financial system, instead of supporting the real economy, itself goes into the life support. Is it a desirable situation? I don't need to give an answer. The thing is, that's why Reserve Bank is concerned. That's why RBI has a stake, all flowing from the law. right? Now, once it has realized, yes, we have to do something, there has to be done, what has it been doing? Let me just say 5 C's, the English letter C. Contributing to the coordination efforts to combat climate change. Those are the 5 C's. Climate change cannot be handled by one individual, one institution, one government. It is a massive problem. By the scientists, it has to be done. By the financial sector, it has to be done. We cannot be doing something where the climate scientist is doing something else, the financial sector is doing something else, the researchers are doing something else. So that's why there is a need to have coordination. And Reserve Bank is also contributing to those coordination efforts. It's one of the players. We have other financial regulators like Securities Exchange Board of India, Insurance Regulatory Development Authority, Government of India. So we are coordinating at all levels. At the domestic level, I'm saying. Internationally, yes, we are also coordinating with many other institutions like Financial Stability Board, Basel Committee on Banking Supervision, and the Network for Greening the Financial System, or IPSC, International Platform for Sustainable Finance. Now, let me again take you to that journey, what Reserve Bank has done. Let me start the major initiative that came in 2007, December. That was the first circular came on corporate social responsibility, CSR. Corporate social responsibility, non-financial reporting, and sustainable development. We can see the sustainability reports by many of the banks. You can have the inputs or the ideas what they are doing. So that was the first major initiative. The second, 2012, the priority sector lending. I hope you are aware of the priority sector lending. It's a kind of directed lending in India, where banks are directed to lend to certain sectors. Agriculture is one, MSME sector is another, education, housing, weaker sections. So renewable was not there. Renewable sector was added in 2012. Loans to individuals up to 10 lakh INR, the banks were asked to count it under priority sector loan. That was the second major thing. 2015, when the Paris Agreement was signed, ratified in 2016, but in 2015, the agreement was signed. Then the priority sector lending guidelines were tweaked. So non-individual borrowers, the loan limit 15 crores, INR 15 crores, can be counted for the priority sector lending. Loans for solar, wind, and other renewables. But what happened? Initially, it saw a jump. Then we observed that it's waning. By 2018-19, it showed the signs of coming down. The financing to the renewable sector showed signs of coming down. So the loan limit was doubled so that the banks can count their financing up to a limit of 30 crores. Again, it jumped. As it stands today, it's for the non-individuals, it's 30 crores INR. Now, just see the timelines. 2007, 12, 15, 20, right? Now, let me just go after what happened after 20. The thrust is very recent. It has gained momentum. 2021. There is something called, I just made a mention of NGFS. There is something called Network for Greening the Financial System. It is a network of central banks and supervisors. There are 140 members globally, which includes IMF, EBRD, and all the major central banks and supervisors. It was there since 2017 to share the best practices for promoting green financing, addressing climate-related financial risks and nature-related financial risks. RBI joined the NGFS in 2021 April. And this year, 2023, we are the steering committee member of that NGFS. That is the main body which is driving the agenda of NGFS. So there are 15 members globally which drives the agenda, and RBI is also one of them. Again, the 2021, this momentum gained. In 2021 May, Sustainable Finance Group. I was introduced by Professor Sanket, coming from Sustainable Finance Group. In Reserve Bank, there is a department called Department of Regulation, which frames regulatory policies related to banks, NBFCs, small finance banks, payments bank, etc. So we have a segregation of, there are many groups which handles different areas, different aspects. There are credit risk groups, balance sheet groups, etc. So the Sustainable Finance Group was set up in 2021 itself to lead the regulatory initiatives of Reserve Bank. And that was required. A need was felt to have such type of group. In 2021 only, COP26 happened, right? So in COP26, if you recall, our Prime Minister made some commitments. Panchamrit, am I right? 5 nectars will become net zero by 2070, for example. So 5 announcements were made. During COP26, Reserve Bank also made some commitments. It was released as a press release. A notification was issued, and 3 aspects were there. 1, we will integrate the climate risk into financial stability monitoring. Again, just link it to the preamble and the role and the functions, why we are concerned. That's why I mentioned that. So that is one very explicitly it was mentioned. We are going to integrate climate risk into financial stability monitoring. That's 1. 2, conducting climate scenario analysis exercises to assess the vulnerabilities in the regulated entities' balance sheets. The 3rd, for the capacity building. We are here for that. Capacity development, education. That's a need of the hour. So 3 commitments were there. were made during COP26 only as part of NGFS membership. Now, after the SFG was created, now we have to think on how to take it forward, right? Professor Caroline mentioned about managerial myopia, right? So if there is a managerial myopia, who is going to handle it? Somebody has to tackle it. Somebody has to drive the agenda. Somebody has to take things forward. And somebody has to promote long-termism. We cannot be playing a T20 match every time. In India, we have a very popular sport, cricket, which has three formats: T20, one day, and the test match. You need to have a test match type of approach as well, not only test match type of approach. So that's the promoting the long-termism where Reserve Bank has to do something. So the first step, where do the banks stand? There was a need to assess the situation, to assess their level of preparedness. You cannot be jumping to a conclusion and making a rule so as to withdraw it and then create problems for everyone, correct? You have to take a calibrated approach. So initially, a survey was done covering all major foreign banks, public sector banks, and the private sector banks. Major, I would say. Now, I'm not going into the detail of what exactly the questions were asked or what individual responses are there. It is there in public domain. You can see it. In 2022, it was done. So it is there in RBI website. If you are interested, you can see it. But one or two or three findings, that's where maybe today's discussion, maybe you may be interested in that. 3 points only. One, all the banks, no exception, all the banks recognize that this is going to be a material threat. The climate change is a material threat. That's okay. But the engagement of the top management, the board, is not sufficient. That was one of the findings. So that means, as a bank, corporate governance. So if I feel that there is a threat, I am not giving attention. That was one of the findings. Second, many banks are disclosing the climate risks or their strategy, but the disclosures are not aligned to some international practices or standard approaches. How do you really compare apple with orange? That's the problem. You need standardization, right? That's why the policymakers are there. You like it or not? So that was the second revelation. The third, of course, no doubt on that, capacity building was something which everybody agreed. The data challenge is something which everybody said. We all know. So these three broad findings were there from the survey. Now, we came to know where the banks were. Now you have to frame the regulations. So which regulation you have to take first? In what form? In what time frame? There are so many issues. So a discussion paper was launched. A discussion paper again in 2022. So how quickly, in quick successions, things are happening. Just note down, 2007 to 2020, and now everything is happening in quick successions. That's the point actually I wanted to say also. So in discussion paper, there were some very important questions. And that was the first major, I would say, which set the tone, or, everybody started taking the thing very seriously. The financial sector I'm talking about. The question was, just to say a few, like, what should be the immediate priorities in shaping the policy discourse? What should be the way going forward, considering the specific situation of an emerging market like India, given its unique economic and the geographic situation? What are the challenges in integrating climate risks into governance, strategy, risk management? What are the potential challenges, the hindrances, the obstacles, and the difficulties in doing climate stress test or scenario analysis? In what time frame should we go for the disclosure related guidelines? Should we go for the qualitative first, or along with the qualitative, quantitative also, any other regulatory efforts, can they be taken? So these were some of the questions to elicit responses. Responses were huge. We are still analyzing, let me tell you. More than 1,300 responses came from government, from NGOs, from international organizations like World Bank, IMF, from academics, from bankers. Huge suggestions were there from different aspects, covering on disclosures, on climate stress tests, on regulatory policies, on monetary policies. Of course, some pertain to other regulators also, like SEBI. So these were now, once that was there, 2022, come 2023, green bonds. Professor, you discussed on the green bonds. Now, sovereign green bonds. Sovereign green bond is just a green bond issued by a sovereign. One of the functions of Reserve Bank is also its government's banker and the debt manager under Government Securities Act. So the sovereign green bond, it was the first issuance in January of this year. By the way, another tranches have also been launched, and a 10-year paper, if at all you are interested as a retail investor, you can go. Today is the last date. So sovereign green bonds, the going coupon for a 10-year paper was 7.35%. There were doubts whether it will have a higher coupon or a lower coupon. Nobody was sure. It was the first issuance. After the auction, the demand was very high. The bid to cover was quite high. The coupon which came out was 7.29% for a 10-year paper. So there was a greenium or the green premium. So that means people had faith. Government came out with this paper, and they could raise the resources at lower interest rate. They came out with a complete framework. The framework covered a lot of sectors. So public sector projects, which the government would undertake from that money or the resources raised, would go to some of the specific sectors, like clean transportation, renewables, energy efficiency, green buildings, biodiversity conservation, pollution prevention and control, climate change adaptation, etc. Again, 2023, a lot of things are happening in recent times, I said. I'm not sure whether you have heard of something called Green Deposit Framework. If you have heard, can you just raise your hands? Nice. and not so nice. I'm happy to see a hand, but I'm quite, you need to know that. So the green deposit framework, we earn something and we do invest our money. We don't keep things in cash. We do invest in various type of financial products. So one product is like a term deposit. You go to a bank. Okay, I want to keep some fixed deposit with you, and you repay it back to me after that period of time. If I want the money before, I will come and ask you, but then you are free to impose some kind of penalty and then return that money to me. That's the simple term deposit or a fixed deposit system works, right? But in this system, how the green deposit is different. Green deposit is also a kind of term deposit, but how is it different? In a normal term deposit, do you really go to the bank and say, I have given you the money, please invest in this area only, this sector only, this geographical location only? Do you really go? Do you really care? Even if you are going to ask the bank, it will not be interested to give you an answer. But in a green deposit, there are identified sectors, the same sectors as the sovereign green bond. There are 9 sectors, the same sectors as the sovereign green bond. And the money which the regulated entity would be raising will be going to those sectors. Now the question is, can there be greenwashing? That's why it cannot be simply indicating, okay, you just have these sectors and invest and all those things. A policy by a regulator has to be complete in itself. So there is a provision of impact assessment. There is a provision of third-party assessment. There is a provision of annual disclosures and the board reporting. All these are built into that. In fact, the sovereign green bond had a second-party opinion by Cicero, a Norway-based company. So that's 2023, the green deposit framework. I would urge all you to go through that. It is in April of this year. Precise date is 11th April. Because I am in a research setting today, you would also be interested in reading one research publication by our researchers, report on currency and finance. This year, the theme was towards a greener, cleaner India. It's dedicated to these climate risks and all. So you can see a lot of things happening in recent successions. That's what is something noticeable. Now let me go to the third part. I said earlier, the banks are a trust institutions. And the banks raise resources out of trust. The trust is lost, it's a problem for the bank. The bank is into the business of risk taking. Now, so what they should be doing? What is the expectations? Any thoughts on that? Well, if the challenge is climate change, the answer, I think, also is climate. Let me see. How? Let me dissect the word climate. Let me go for C. The corporate governance. Ma'am, you covered the corporate governance in detail, and that's one of the basic things. The corporate governance in any institution drives the agenda, drives the risk management framework, What are the metrics and the targets they are going to follow? What are the IT systems they need? What is the HR system they will follow? What is the training and development systems they will follow? What is the compliance culture? What is the adherence? Correct? So the corporate governance is very important. That's the first C. Let me go for the second. L, liquidity and capital adequacy assessment. Banks are into the business of risk taking. So they are faced with the liquidity risk, which has happened in recently in March. Banks face the liquidity risk, right? So the liquidity adequacy assessment needs to be done. For the expected loss, you have provisions. For the unexpected loss, you have capital. So capital adequacy is also important. So that's the second part, liquidity and capital adequacy assessment. The I, internal control framework. Banks have 3 lines of defense. The first line of defense is the branch or the vertical, which is the frontal part. We interact. Then the risk management team, and then the audit team, the third line. All of them challenge each other. This is the internal control. M, the management of financial risks. What are those financial risks? Credit risks, market risks, liquidity risks, operational risk, right? So the management of climate risk, it's very important. How do you manage? What's your risk management framework? How do you manage those risks? Because banks are into the business of risk taking. A is very important. Adherence, which is compliance to the statute, the regulations, the rules. It's very important for a bank to comply with the norms. T, the banks are required to, or they should be testing the climate vulnerabilities in their balance sheet. That's very important. How can they do it? That's why the climate scenario analysis and the climate stress test can come to their rescue. That is the testing of the vulnerabilities. And the E is building expertise. It's very important. Unless your HR, your team, your management has the requisite capacity, it will be difficult. So I think I have exceeded your time. So maybe if you have any questions, so I would like to end my the 3 questions which was coming to my mind on the regulatory perspective. So maybe if you have any questions, so that we can.
Any questions, you can raise your hands and we'll pass the mic along. Shikha. Shikha is also an ex-banker. She's spent, 20 years in banking before joining academia as a researcher.
I hope she's not going to ask anything on green deposit. Can you just, yeah.
Shikha, the mic you may want to turn on.
Maybe I have to. Yeah, is this better? Okay. We see that Reserve Bank of India is concerned about climate regulation, climate transition risk. They've signed up for the Basel, they've signed up for the central bank guidelines. But we don't see the similar kind of things happening with Indian banks. For example, when we see the United Nations Environment Protection FI, UNEP FI, there are around 300 banks which have signed up for that. And there's only one Indian bank, Yes Bank, which has signed up for that. In fact, in Asia itself, there are about 65 banks which have signed up, but we don't see a similar thing happening with Indian banks. When, as part of my research, I approached some of the Indian private banks and asked them about this, they said, we're waiting for RBI to come out with regulations and then we will follow this. Just wanted your views on that.
You wanted to know when the regulations will come or when will they sign? So, in fact, that's why there is a push from RBI. So we want to come out with regulations. It's a fact that many of the Indian banks are, or they will be taking, but then they are waiting. This is the feedback that even we have, that the banks are waiting for the signal from the regulator. There are a lot of challenges in this field. There are challenges on the data aspect. Let's say if you want to come out with if you may be having the information on the emissions, but how much is my counterparty emission? It is very difficult. Let me tell you a very practical situation, because you have also been a banker. When we ask the banks, do you know your counterparty's locations? Let's say you have a counterparty which has a plant and machinery located at different parts of the country. Do you know the location? Almost all the banks said no. They have extended the line of credit on the basis of credit risk. Correct? Their assessment of the credit risk. They never assessed their location. But the location will have implication from the climate aspects. Correct? A coastal area will have a different climate. Let's say in Odisha, somebody will have a different risk. And in Assam, it will be different. In Haryana, it will be different. That was never assessed. But you need data. Presently, when we tried to go for the data, we got only reliable data, I would say. Data only up to the district level, not below. But not every district, you need it at least at the pin code level. So a lot of challenges on data, a lot of challenges on the capacity aspects. So they are definitely waiting for a signal from regulators. And we are working on that only to give the signals. So you can expect very shortly something. So they are in the making. Disclosure framework. We will be issuing guidelines on disclosure, and we will be issuing guidelines on the stress testing. So once the disclosure framework is out in public, what will happen is the banks will be required, not only banks, other regulated entities as well, like all India financial institutions like NABARD, SIDBI. They will also be required to disclose their activities on governance strategy, and they will cover all these things, like signing up with UNEPFI or GRI or likewise. They will be disclosing. So they are definitely waiting for the signal from the regulator, and this is where we are working.
One last question. We're running out of time. You have a question? No. Rajesh.
Yeah, thank you, sir, for the insightful this one. One question that I want to ask is this from previous of my work where I was working with the technology strategy of banks, basically. Now, essentially, before giving a loan to a third party, right? So like a credit worthiness check, emission worthiness is also required to a certain extent, but I do not, as in, at least at that point, we were doing some studies, we came to know as in they don't, banks do have some parameters that they check while giving a loan, but typically they are not doing these checks before, as in the emission part of the this one evaluation while giving a loan is not happening. Is it because of a regulation issue or is it something else?
See, let me start like this. Climate science is not something new, right? Climate science is very old. But the integration of climate science with the financial sector is something new. So how the financial sector had developed over a period of time, they were assessing, if I have given loan to you, I will assess you whether you will be able to repay it to me or not. I will assess you on the basis of your credit ratings, your previous experience, your history, your business cycle, your plan, whatever. Correct? It was never integrated. The climate aspect was never integrated or thought to be integrated. If you think to integrate, then only you will consider, okay, let me take emissions or let me not take emissions. And to what extent? Then you will try to develop the situation. This is how the humanities develop. Correct? So, not that they are waiting for the regulatory push, that is also one of the important factor. But at the same time, it was never into the business decision making. But now the things are developing that way. Many of the banks have approached World Bank. You please do it. Please help us. Individually, they have approached. So they are also waiting for the signal from regulator. They are also contributing to developing the data. Let's say if I have to, again, let's say I am convinced the emission need to be assessed, need to be taken into account for assessment. How do I assess? You are emitting country, fine. Not that I do not have to extend a loan to a thermal power sector. Correct? But then what is your emission? You may be having a better, let's say you are a steel industry. You may be having a better blast furnace. How do I assess? What is your emission intensity? Do you have information today? Unless we do it, we develop. It's a work in progress. Second question. What do you define as a green? How will you define what is green, what is not green? You need a definition which is acceptable to all, right? They are all the work in making. It is eventually that is going to happen. You know, in COP28 is ongoing, right? UN Secretary General has said one thing. I don't know whether you have followed. He has said, renewable is the only thing which is going to be there. It is only a matter of time as to how much heat is the earth is going to endure before renewable thing will happen. That's the ultimate thing. Effectively, that is going to happen. The point is, you need data, you need a situation. There is no debate whether it should or it should not. And why it was not there historically? Because it was never thought, the integration. You had asked, if you permit, you had asked a question about how the banks would earlier, how the banks would stop financing, or I think previously you had asked, right? It cannot be like in a day, stop financing today, from tomorrow I'll be financing only renewables. That's why the concept of transition plan, transition planning, and the transition finance. That's the thing.
Thank you so much. Thank you so much, Amit Sinha ji.